Good morning and welcome to Candid Coffee from RIA Advisors, a live, open forum to address your money, retirement, risk management, and how to protect your household against financial vulnerability. Send your questions now to questions@realinvestmentadvice.com. Now, here are your virtual financial baristas coming to you live from an undisclosed, secure containment location. Richard Rosso and Danny Ratliff.
Hey guys, good morning. Thank you again for joining us. A little bit different version of Candid Coffee because it's not going to be so candid today because we're going to go through some long-term care slides. This is a topic we get a ton of information on, a lot of questions, and so we have a ton of information for you guys today. So we're going to run through these rather quickly. If you have questions, please look to your control panel. It should be on the right-hand side of your screen, and you can ask questions there. We will try to get to those. I'm Danny Ratliff here with Richard Rosso with RIA Advisors. We're so thankful to have you guys. Hope everybody's off to a great holiday season. I know it's been a little bit different this year. Usually we're used to doing these in person, so there's lots of places to get long-term care information from. And one thing that we want to make sure is that we get the facts, because there's a lot of information out there that's meant to push somebody in one direction. So we went to Nationwide, a great source of information, actually a carrier for long-term care that we've utilized previously. And they've got a lot of good stats here. We also like a handful of other areas to get information for this, which we can share with you. If you wanted to schedule a meeting, you can go to the handouts question. You can have access to our Calendly. It is an arena or an avenue to actually schedule a quick 15-minute call, a 30-minute meeting, just to kind of get an introduction to RIA, what we do, and if you want a little bit one-on-one, more personalized visit. Jump right in here, Rich. Is there anything you want to kind of address before we do?
Yeah, this is a heavy topic for Saturday morning during the holidays. Thank you for attending this, because I think, well, Danny and I, as we talk about on the radio as well, is we're not out of the COVID storm. We don't really understand the full ramifications economically. And even though your household might be doing well now financially, companies are looking to make big changes in the face of lower demand for goods and services because many households are damaged. And this long-term care discussion is a way to help you understand that some risks you can absorb, some risks you can handle on your own, some risks you must mitigate, you must push to an insurance company. So we want to go through what the misunderstandings of long-term care. I want to go through, Danny's got a wonderful example of what I think is happening so far with COVID. And of course, take your questions. This is not an easy topic. This is not a fun topic, but we want to educate you in the best way we can, and also make sure that if you're getting offered a long-term care policy, you know what to do first. There are things you need to do first, and guess what? You may not need a long-term care policy. You only may need, maybe even if you do need a policy, only on one person in your household. It's expensive, everybody.
That's right.
It's not cheap. You got to work
exactly
with the cost as well. So that's the first thing I want to share with you.
So let's jump right in. So important things to keep in mind: these types of products are not FDIC insured. They're not going to be paid by the institution nor government agency. So you have the ability, and depending on how these things work, could go up and down. These companies could go out of business. There are some levels of protections that could be in place, but that's something that you need to make sure you're aware of as you look at these different types of products. So today's agenda, kind of like Rich just mentioned, we're going to cover what is long-term care, why it is so important as people are living longer and longer, some of the cost challenges, and then how do you create a long-term care plan? And I think this is really important. If you listen to Rich and I, anything, we tell you everything begins and ends, and this does as well. And we are really big advocates of a plan because it helps give you that roadmap, and it lets you know. I have a lot of clients that are self-insured, that they don't need this. Now, there are some that say, you know what, I may want this, but I want to have legacy plans. I want to make sure that I can continue to keep funds for the kids or for the church or charity or whatever it may be. So that's why it's so important to go through these and make sure that we understand. So what is long-term care? And I think one big thing to understand is that a lot of people misunderstand other insurances that are out there. And one thing, Rich, is that Medicare is going to cover long-term care cost. Case, they're going to cover a little bit of an extended stay initially, and then you're going to be on your own, which is why typically you're going to have basically a waiting period before you can actually start to utilize your benefits. But so long-term care is personal care supervision needed by persons of any age, not just elderly. It can be anybody at any age, and it is associated with the effects of aging, but could be due to a car accident, could be due to another type of illness, anything out there that would actually prevent you from performing activities of daily living. And so we're going to get to what that is here in just a moment. But some of those conditions could be, like Parkinson's, heart disease, MS, Alzheimer's, cancer, a number of things. So keep in mind, I all think that we're indestructible. A lot of times, as we age, we start to realize that we're not. I'm certainly feeling the impact of years and years of wear and tear on my body. And so I'm sure others are out there who feel the same. And but it is something that, like Rich mentioned, it's not a fun topic. It's not something that we generally want to cover because it makes us face that mortality or aging and slowing down. And I think this is a good tool to have in place regardless of the age. Rich, you want to go a little further here?
Yeah, I mean, I think one of the things you have to keep aware of, that you have to understand that the severe cognitive impairment is something that we all need to be very concerned about, because I don't know if you know people that have cognitive impairment, but they are physically healthy, but they're going to live a long time and need overall 24-hour assistance, which is incredibly expensive. So that first one really gets me. And the longer we live, the more that issue becomes a problem. And many seniors, here's my belief, many seniors are going to have how can I say it? Many people are going to be alone. I think many seniors are going to be alone. They're not going to have a spouse. I mean, if you look at statistics right now, you see that. The next is the inability to perform 2 activities of daily living, right? You can't bathe, you can't dress, use the toilet, even if it's temporary. So this is what qualifies as long-term care, but that severe cognitive impairment is the one, personally, Danny, I am scared to death of, because I see people, we know people who go through this, and they are been in these assisted living facilities for 5, 7, 8 years, and the costs are just devastating overall.
Yeah, they certainly are. And so, facing some of those realities is always difficult. Like you mentioned, there's a strong likelihood that people are going to need that long-term care. We see people daily that, they look fine, and a lot of times they can't perform these activities of daily living. And you mentioned, you're afraid of people living alone. And, a lot of times when clients come into our offices, and we do a lot of different types of assessments. And so we like to do some longevity quizzes, give us a little bit better idea as far as how long we need to plan. We're going to ask questions like, tell me a little bit about your parents. How long did they live? When we're doing these types of plans, it's really important to use realistic numbers. And I think what this also will allow us is to say, okay, well, Mr. and Mrs. Smith, here, it looks like you have a much longer lifespan here, Mrs. Smith. We're going to need, potentially some care on you, because you may be alone. Where, unfortunately, for all you ladies out there, you guys are typically taking care of us, which I'm sure many of you would say, well, what's changing there? But it's one of those things that I think that, we need to be mindful of. And so, I think that one thing that we typically associate with long-term care is nursing home, and that's changed quite a bit. There is different types of care. There's the informal care, which is becoming more of the normal in a lot of ways, that we're seeing a lot of baby boomers taking care of their parents. In fact, we call it the sandwich generation now, because you may have kids at home, and then you may have an elderly parent at home as well. And so you're taking care of 2 different generations. And so those are things that, there are ways to help mitigate some of the costs, because it is costly. People have to retire, they quit their jobs. They may do things a little bit differently because they're trying to care or provide for a loved one. The home health care is another way where you actually have professional caregivers that come into your home. They can do, you can start from somebody that helps and kind of cleans the house, make sure that you can do chores, personal hygiene, in and out of the shower, just the normal stuff, all the way to skilled nursing or occupational therapy. And then community care, this is one that we're beginning to see more of. There's assisted living, adult daycare, and we're seeing a lot of these facilities now. And Rich, you can speak to this. There's a lot that that'll let you kind of age in place in some ways, where meaning that as you age, you can kind of upgrade to different types of care along the way. And this is something that we talk about in our Right Lane workshop. Rich has some really good handouts associated with what types of care there is out there. And so a lot of good information. But so most of us, Rich, you were mentioning, we're going to have to start planning for these things. So the stats indicate that 70% of Americans 65 and older will need care as we age. Tell us a little about what you're seeing, Rich, like as far as where people are staying, what they're doing. Do you see any different trends here?
Well, one thing you got to keep in mind is the home health care is absolutely the most popular, and the toll on caregivers is very well known. People that you deem your caregivers, whether they're your children, extended family, spouses, the emotional and physical toll on those caregivers can't be dismissed. So whomever you select as your caregiver, you need to understand what kind of toll this is going to take on them. Sometimes it's the loss of careers, loss of money, loss of displacement. Overall, it's very tough, and that's why we need more people to work in this home health care kind of community area. Now, the community care is going to be interesting because my vision, and I wrote about this in my book, was that you would have small adult-like communes, tiny homes, mobile homes, and it would be a communal get together for a lot of people that would be more cost effective. And actually, you're starting to see these homes, these kinds of communities pop up in Florida. They're very nice, very well manicured, communal kitchens. People take care of each other, communal gardens, because the retirement crisis, especially in the face of COVID, is real. More and more of these insurance companies are also starting to put in caregiver kind of services, caregiver counseling, because it's required. So the toll on the caregiver, the cost of the growth in home health care is also important. So I don't know if you noticed any, but there's just a lot more services popping up about home health care. A lot of companies, like a place for mom, right? You can call in. I don't know what happened to dad. He's buried in the backyard somewhere. But there are a lot of more of these home health care services, which means you have to do more homework. You have to do more homework overall. So these are trends we watch. And in the face of COVID, post-COVID, we're going to watch to see how they change. Everything's open for discussion.
Yeah, absolutely. So about the care, we talk to people every day, and a lot of times when somebody comes up to us and says, hey, we need long-term care, we need to address this, it's usually because they're going through it and they're seeing the cost because they have a loved one, a parent, a family member that they're actually putting through some type of care. And so looking at the care of what this could be. Sorry guys.
Listen, everybody, we are at home. So
you're
going to see Danny. Yeah, you're going to see Danny go through. He's got about 9,000 kids there.
Yeah, something like that.
I've got about
feels like it's
I've got a whole rodeo of dogs that if a jogger passes, they're threatening our lives and they have to bark. So
this is the new
reality.
kind
of thing we're going through. This is reality.
So anyway, so we see this where people are saying, hey, I'm seeing how expensive it is, and it's mind blowing to many. And so this is where you jump in, and essentially you're going to see a lot of times they say, I need to look at this for myself as well. But so these show some of the numbers. Home health aid services, annual average cost $50,000, adult daycare 18, assisted living facility, 1-bedroom single occupancy 46,000, nursing home, semi-private room 88, A private room for a nursing home, $100,000. Now, I'll tell you this. Talked to a client last night. He said looking for care for his aunt, and had been in assisted living. Prices were probably closer to that 46,000 number, but said needed to go look at skilled care. And this isn't in Houston in the Metroplex or any big areas. This is in kind of out in rural, smaller cities, towns, things of that nature. And he said the cost for a private room was $10,200 a month with skilled nursing. So think about that. This was in Brenham, Texas, $10,200 each and every month. Now, if she wanted to split the room, that number changes, and it was actually cut in half. And Rich, you had an interesting thought on that, because it used to not be that you would end up paying, that's how it worked, right? You'd pay a little bit different. They'd step it up a tad bit if you wanted your own room. Where it seems like now, even like what these nursing home numbers indicate, 88,000 versus 100. It seems like now, though, that we're seeing some things change, especially after COVID, where maybe your own room is a lot more, people want their own room a lot more, your family wants that. And I don't know if you would say that, these nursing homes are taking advantage of it, but it seems to be that's what we're hearing more and more, that these numbers are jumping astronomically. And that may be the cost of what you've talked about previously with COVID. But look at the average years. You're typically looking at just under 4 years is what the average stay is. And so on the right-hand side, you can see what those costs are. I think it's really interesting to bring it back home. Think about new home prices. What do those run? I mean, those are running about $377,000. And so now that's a little bit older data here. So that's September of 2018. Those numbers have likely been pushed up a bit because it's been that seller's market, with interest rates slow as they've been. And so you could think about this, that you could take your whole home, especially if you need to go somewhere, and everything could be gone. And, I think that's a very interesting statistic to kind of bring it, keep it in perspective.
Now, this is average stay.
Correct.
What I worry about is Alzheimer's. So one of my friends is an old Western star. Actually, I'm friends with his family and his wife. He's 73 years old, and he has Alzheimer's. And he's in a home in Glen Oaks, in California. And physically, he's fine. But he's been in assisted living for 6 years. And that adds up. So this is just the average state. What I worry about with Alzheimer's and any form of dementia is that these costs can double.
Yeah.
I mean, and that's why, I don't know, private room in a nursing home, unless you're in the top tier or you have insurance to mitigate it, most of us will not be able to have a private room. But that we have to deal with the reality of what we can deal with as a household.
Yep.
You got to come up with your own practical plan for it overall. So just one thing here, we'll go through it quickly, but people think, oh, Medicare pays for long-term care, so I'm good. Well, yeah, 100 days of skilled care following a 3-night admittance to a hospital. Okay, very specific rules. It's a portion of up to 100 days of skilled care. Plus, they're going to want to know, well, they have a definition of skilled care that may be very different than what you want for your grandmother. Right? So do not think, it's a nice little addendum, but don't think that Medicare pays for long-term care. Now, Medicare Advantage is trying. We're not as much a fans of Medicare Advantage. We talk about that all the time. The Medicare Advantage, the more all-inclusive plans are starting to look at more long-term care options, because if there's going to be innovation, it'll probably be in that space. So keep in mind, it pays a maximum of 100 days of care, daily copay after 20 days, right? And it covers skilled care only, not chronic. If you have something that's a chronic condition, forget it. The money's going to run out. So Medicare, you got to look at, there's some things that it gives you and I'll take it, but do not depend on Medicare.
Well, and the other thing people are depending on is they're thinking, well, my Social Security is going to be my long-term care. And unfortunately, we know the data. I mean, we've seen it. The numbers haven't changed much, but 62% of Americans who are retired now rely on Social Security for more than 50% of their income. And look at the numbers. I mean, the numbers don't add up. There's no way you're going to be able to rely on just Social Security to help, cover those costs. So we've got to be cautious here.
I'm going to make a very bold statement. The government doesn't focus on long-term care. It doesn't even understand what it's going to be up against. We can't figure out anything. I mean, we can't even stop spam calls coming into our phones. I mean, we are not a very functional nation in many ways. My thought is eventually Medicare pulls away from taking care of long-term care. I don't think it can afford it. That's a very bold statement. It's just my own assumption. I don't have any data on this. But the trend would be to be focusing more on, we've got to be focused more on healthcare expenses. And this long-term care thing, we're going to have to cut these benefits, or Medicaid, or the states are going to have to take advantage of it. And we know where states are, right? We know municipalities are cash strapped. Many states have not managed their budgets very, very well up to COVID, and now it's even worse. So in other words, it's up to us. Unfortunately, it's going to be up to us as households to figure out a plan that works for us. So I wouldn't be surprised if Medicare dumps this whole process in the next 10 years. Because they're not going to be able to afford it. Then they're going to see that it's going to be, the challenges are going to be too much.
Yeah, I agree. So things you have to consider, talking about challenges, don't plan for long-term care costs. Do you really want to rely on family? That we hear a lot about that. And we joke, Rich says I have 9,000 kids, and people say, well, you keep having kids, you have somebody to take care of you. And while you hope and pray that's always the case, you don't want to put that burden on them either. And so if you do have the means where you can prepare, and it's not always about having some huge lump sum. It's also about, can you prepare accordingly? Can you make the right decisions along the way to help prevent that additional cost for family? Because the impact of providing care, like we mentioned a bit ago, we see a lot of people that have retired early, they quit their jobs. It impacts the household financially fairly significantly. So keep those things in mind, especially if you don't have enough resources. Run that financial plan. I think it's extremely important. Now, long-term care is
keep this in mind before you go on, Danny. Just keep this in mind.
Yeah.
One of my favorite shows is The Odd Couple. Great show in the 70s. Mm-hmm. And Felix said something once that really resonated to Oscar. He says, when you assume, you make an ass out of you and me. And the reason I'm saying that is, don't assume, because I get people that assume their children are going to take care of them. Oh, my kids are going to take care of me. Have you had the discussion with them? No, but they will. Really? How do you know? Don't make that assumption. It's okay to ask. It's okay to help them prepare if that's what they want to do. Mom, Dad, I'm going to take care of you. That's fine. Let's come up with a plan. But don't assume that to be the case. You cannot.
Absolutely. Care is likely, this is one of the things we see, because we do see that family members are taking care of each other. A lot of times it's very informal how it's paid. So you don't necessarily always see the cost, right up in front. And so, 3 out of 4 long-term care providers are typically family, and it's women at that. And so, when we talked earlier about, typically men are going to be taken care of by their wives is generally what we see. Now, not always the case. I don't want to generalize too much, but because we know that's not always the case. But it seems to be that, that has been, because typically women outlive men, and you do see that happen. So, want to do one thing before we move on. So if you guys have seen, we got some new nifty mugs, Candid Coffee. So we're going to give away a couple each show each time we do these. So wanted to give the first one here to Peter Allenby. Peter, we're going to have somebody reach out to you. We appreciate you guys joining. You're going to get a mug here soon. So if you need anything, we got your coffee mug here. Rich, what kind of coffee are you drinking?
This is called the Bones Coffee Company.
Okay.
I'm a coffee wuss. I don't like very strong coffee, so this is more medium roast. The strong coffee taste. Remember, I don't know if you remember a kid. Do you ever put a lot of stuff in your mouth as a kid, Danny? I don't see you doing that.
No.
Like dirt and stuff and dirt.
Nah.
So do you ever get like battery acid on your hands and they go, oh, it burns, but I wonder what it tastes like? That's what strong coffee tastes like to me. So,
well, I can't make that comparison, unfortunately.
I've had a very interesting childhood. Bones Coffee Company has all different flavored coffees, especially for the holidays. So mine's more of a medium kind of roast.
Awesome.
But Dunkin' Donuts is usually my favorite. I will admit, Dunkin' Donuts coffee is my overall go-to.
Yeah. I see. I'm on the opposite end of the spectrum. I like the dark coffee. Typically drink it straight, and so I'm drinking Death Wish coffee. It may sound kind of weird, but if you need to pick me up, not so bad. And it doesn't give you the jitters either, Rich. It's pretty good. So it's actually, they claim it's one of the world's strongest coffees. Yeah.
Yeah, Death Wish coffee maybe doesn't leave you that strong aftertaste. I know our producer, Brent Clanton.
Yeah.
He drinks so much of that. I'm surprised he even sleeps.
Well, he's the one who turned me on to it. So it's kind of interesting. It doesn't have that acidity, and it's also it gives you a little pep. So when you're up early in the morning, like Brent is every day, you certainly likely need that. So anyways, you know what? We could be coffee, right?
Yeah, I'm sorry, you Starbucks fans, but I'm not a fan. I'm not a
Starbucks fan.
And I don't like all the frou-frou drinks because the sugar and the calories means I'm going to have more longer-term care costs in my future.
Yeah.
The more
Nikki
I
just
drink.
texted me that she loves Starbucks. I don't mind
Nikki,
it. I just don't like Dave.
Nikki drinks all the Kool-Aid. She likes all the Apple products. She's a consumer. Nikki Brock's the consumer. Okay.
All right, so let's move on here. Yeah, long-term care, all the fun stuff, right? So, one of the biggest things is we want to avoid that dependency on government programs, because we know, one of the bigger things that we talk about daily is the lack of funds. Debts and deficits seems to be a common theme that Lance and Mike write about. We're talking about these on a regular basis. How do you protect that surviving spouse from those costs? So what if they can't care for you and you're going to utilize all of your funds and deplete them? That could be huge. That could really impact a household and impact the remaining, quality of life for your spouse. So I think that's extremely
important to make sure that you're preserving
those funds.
Yeah, we get clients, right, Danny? We get clients that say, I want my mom to spend down her estate to go to Medicaid. And I'm like, do you really want your mom in a Medicaid facility? If you want the government program, you're going to get the government program. So I don't know if you really want that for your relatives, your loved ones. I'm not thinking you do. So less dependence on the government program. Now, that doesn't mean you can't look at what government programs might be available to you. This is where you need to seek out what we call an elder law attorney. See, an elder law attorney will help you do the best of both. I want to try to utilize whatever healthcare programs, maybe mom or dad are veterans, what's available. How am I maximizing what I can that can also go along with long-term care coverage? So there is nothing wrong with consulting an elder law attorney to help make sense of what government programs you might be missing. It's very important.
That's right. That's exactly right. So, what do you do? How do you address some of these things? You obviously, like we've discussed, you figure out what your health profile looks like. You determine, what are you likely going to need? What is your family? What type of illnesses do you typically encounter? Maybe none at all. Maybe you just have a ton of longevity. Those are things to take. But the impact of not taking action the consequences can be huge. So, like I said, we want to kind of run through this because we want to leave this open for questions. So it's a 3-step process. So one, you need to understand your risk, the needs that you may have, like we said, the personal experiences. Develop the strategy to offset that risk. Determine, are you self-insured? Do you think you have enough for you and your spouse and to accomplish all the goals that you have, to continue to provide that quality of care for one without the other, those types of things, right? And then how do you implement the strategy? There's a lot of ways. And it used to be, the old thing about long-term care, and especially it's changed so drastically in the last 20 to 30 years, and really even in the last 10 years. And the cost has gotten to be a little bit more achievable. It's not out of reach like it was at one point. The biggest thing that we used to see is that, maybe you got a plan back in the 80s or 90s, and the plan was $30 a month. And, they kept increasing the amount what your premiums were. So this is traditional long-term care. Typically, it's just like your regular insurance, right? You're going to pay a little bit at a time each and every month, or maybe you have quarterly or annual premiums. But what was happening is that the actuary screwed up. They didn't anticipate so many people to live as long as they did. Happening is they actually began to increase premiums over time. And overall, this was extremely detrimental because now you have people who had to make a decision. They're much closer to actually having to use this potential type of service, but they may not be able to afford it. So that's a big issue. So they've changed a lot of their actuary tables on how they actually come to those numbers. There's also some new hybrid plans. And so these hybrid plans are pretty neat. And so we're going to get into the details on some of these things here just a bit, but kind of talking
about. Go back to that last
yes,
one.
Sir.
So here's what I want you guys to understand in number 3. Your long-term care plan is going to be a multifaceted plan. It's going to be like a Van Gogh. Well, no, that's not Van Gogh. Is it? He creates all those crazy things. Well, you're going to create this painting of what this is going to be. It's not going to be so plain vanilla like just long-term insurance. Unless I have a real legacy intent where I must keep my estate intact for my family, I could do a few things. I can have some long-term care coverage. I can self-fund where I can liquidate assets. I can look at somewhat unorthodox things that are better, more mainstream today, like home equity conversion mortgages to pull money out of my home. Right? I can craft a creative, which doesn't really go along with money, but sometimes it does, long-term strategy that implements a little bit of all that I can afford. So it's not so plain vanilla. It's like one of those drinks at Starbucks when they mix all that junk in there. All right? You're going to create a long-term care latte, and you're going to be the barista of long-term care, right? You're going to create this because it's not so clear-cut. What we do here, so you understand how we make the sausage, and when we do plans, we want to do the insurance very much last. We want to see creatively how you can self-fund before you go to long-term care, right? We want to see, well, you've got so much equity in your home. Let's use that, right? You've got these assets that you can sell and liquidate. Let's try that. You've got this. Danny we'll talk about other products, like you might have a life insurance policy that has riders to it. But, in other words, it's not all long-term care insurance. It's a combination of things, unless you can fully afford a hybrid plan or a plan. And again, premiums are going to be pretty expensive.
Well, I think that most people, it is really a hybrid thing, because a lot of times we're not looking to cover all of the cost of long-term care. Sometimes it may be just to mitigate some of those risks and cover a bit of it. You may be able to use, like you mentioned, a number of other areas that you can pull from and draw from, which I think is extremely important. But so we talk about how we protect all other aspects of life. Some of it because we have to, like homeowners insurance or auto insurance, but we also need to think about that long-term care insurance. All these different things that we do. I think that this is one that's typically overlooked because of it's the one thing that we're just not used to and we don't like to think about. So the perception of long-term care is that, one, it's just a nursing home. 2, you have the loss of premium. It is complicated. People are skeptical that they'll need it. You feel like you don't want to put all this money into something and then not have it. You're going to rely on either Medicare, Medicaid, Social Security, all those other things that we've discussed already. But these are things that, the perception is not always right. So we know it's not just a nursing home. We know that there's lots of different ways to explore this and things that you can do to help protect you and your family. So long-term care provides a pool of benefit dollars that's to be used when and where it may be needed. So as you can see, these are all the areas that we talked about already, those care coordination services, assisted living, nursing care, home care, which is becoming more and more and more common. And then candidates for long-term care coverage. So who needs this? I mean, I personally think everybody should have some type of long-term care in place, but this would be anyone with assets to protect or pass on to heirs. Everybody thinks it's just for elderly. Well, unfortunately, the problem with this is that sometimes, the older you are, the higher your premiums are going to be. So you may be able to lock in lower premiums at a much younger age that are actually, it's going to save you money longer term. But also, like we discussed earlier, we don't know when we may get hit with life throws us a curveball, something happens, and you have an illness, an accident, and you need care now. How do you do that without disrupting the family?
Well, the thing is, you got to keep in mind there's a sweet spot for life or long-term care insurance premiums. So if you're between 55 and 64, it's okay. But there are a lot of people that I know a lot of younger people under 55, under 50 that are very worried about longevity risk and are looking at long-term care policies because they have family members, they have experience with this. They have family members that are using long-term care insurance, and people go, my gosh, if we didn't have this long-term care coverage for grandma, what will we do? So once you get past a certain age, 64, 65, 66, it becomes sort of cost prohibitive. Plus, you might have many pre-existing conditions because underwriting for long-term care can be a bit draconian. You may not be able to get it. So this is something, if you're 50 to 55, this is the time for you to really look at it overall. So, because if you're 70 years old and you're looking for long-term care coverage, then you might not even qualify for it. So
That's right. And so there's lots of different ways that you can go about this. One thing is how do we assist people? One, I think Rich mentioned it. We do this through the financial planning. This is something that we actually come to at the end because we know what type of assets you have, where they are, how do we start to pull and so, quote unquote, as Rich would say, create that latte for you of long-term care. Make sure the gaps. So our coworker Nikki just made a great comment. She does HR for us, and she said, this is one thing to consider as well, is that it is benefit enrollment season. I know some people may have just gotten out of it. Other people are right in the middle of it. You can some companies actually provide long-term care where you don't have to go through such underwriting. Maybe it's a group type of plan and typically portable as well. That could be something to explore and look into. Don't overlook it. Don't overlook the disability. Don't overlook all these things. And this is something that we help our clients with when it is open enrollment. We say, hey, if you want somebody to help you look at all these, make sure you're not leaving any money on the table or not taking advantage of certain benefits. Let's sit down and look at all these things together. It's much more than just money management. It's full planning. It is holistic. And I think that is so crucial to making sure that you don't fall into those pitfalls. So how do you get started?
A lot of policies, just on a point there are a lot of, when you're going through open enrollment, I go through with so many people to say, look at your open enrollment package with fresh eyes, like you just started with the employer. A lot of the bigger companies do have some form of long-term care provision, but people seem to ignore it. You got to find out if it's portable. That's the most important thing.
Yep, absolutely.
You can walk your job,
that's with any of these
walk your job or less, that you still can pay the premium and you still have the coverage. But you really do want to make sure that you check your employer package. Might have it.
Yep, absolutely. So this is where you have somebody who's going to get after, and I can't stress this enough. I think this needs to be done with the plan so you understand exactly what you may need, how you need it, and how much you're going to need. I don't think you just go to somebody and just say, oh yeah, I need long-term care, and they say, well, here's how much it costs, here's what you need. Well, that's not always the case. So make sure this is something that needs to be very thoughtful. It needs to be the process, and so get a personalized long-term care estimate after that financial plan. Number one. Consider the different types of options like Rich was mentioning, other things that maybe you may be uninsurable. You may say, well, I can't do this. Well, that's fine. Well, let's start talking about how we can get you there. What other assets do you have? That's where the plan's going to come into place. Do you have life insurance with long-term care riders or coverage in general? Those are important things to know. And we're seeing a lot of changes within the industry. And so the one really cool thing is, and it's interesting that years ago, we were talking about like 80s and 90s. Well, there were over 100 companies that provided long-term care. There's about 10 now because so many of these guys went out of business. They don't provide it any longer. But the 10 that are still around have gotten so much better in many ways. Now, there's still some draconian policies out there, but there's also some new hybrid policies. There's also insurance that you can have that, like the life insurance with that coverage. And so, Rich, I think we've seen a huge shift and change as far as how we're able to access long-term care. And it's not what it always was. We're seeing a lot of these different hybrid ones that are pretty neat.
Well, keep this in mind. A couple of points from this slide. What we don't have in there. One is when it says consider potential sources of funding options. Social Security, you don't see in there. I had one client that didn't want to wait till age 70 to get $3,300 a month from Social Security. He wanted to take it at 62 and get $1,600 a month. And I said, well, if you wait till 70 and he didn't have long-term care coverage and he didn't want to spend it, I said, well, that's where you would be great to know if you were in a long-term care facility, you are getting the maximum cash flow from Social Security. So piggyback on Social Security also as an option or a funding option, which means you need to have a smart strategy for it. Also, life insurance. You might say, you know what, I want to leave a little life insurance for my children. Life insurance underwriting may not be as draconian as underwriting for long-term care coverage, which means that I can add a rider. It's going to cost a little money, but I can add a rider, which means if I do have an event, I can tap the death benefit sooner of my long-term care or cash value. That's another way. Now, I have disclosure. I own a nationwide untraditional policy. It's a policy where you put money in and you buy a certain dollar amount of coverage. And also, if I don't use it, my daughter as beneficiary gets the premiums back. Because I really couldn't qualify more for traditional long-term care coverage based on an issue. So I had to find a different way to do it. I had to find a hybrid policy that would look at my lifestyle habits, which are very, very good, my diet and so forth, and how I exercise. They take into account lifestyle as well as health and said, okay, Rich, Nationwide said, sure, yeah, you can put X amount of dollars into this thing for 10 years. And guess what? You're going to buy $190,000 worth of coverage. And if all the premiums you put in there, if you don't use long-term care, it acts like a life insurance policy. So there are ways to craft this in a way without traditional long-term care as your policy. That's why I think I know money's not creative, but in the long-term care stuff, your money you need to be much more open-minded. Your thinking has to be much more broad when it comes to how to cover your long-term care costs.
And so this is something here, this is a healthcare and long-term care cost assessment. Just kind of talks about your current health, lifestyle, just what Rich was talking about. Rich explained this much better than this. So, we want to take all those things in consideration because you may be uninsurable. There may be other ways that you can do that. And that's one thing that we find within the plans. Now, this right here, this slide, I think is extremely important, Rich. And I think you'll agree here. Anybody who's ever helped anybody with long-term care, I think you'll agree.
Because I have
indemnity plans.
Yeah, right. These in the Nationwide. I think the Nationwide that I have, that's an indemnity plan.
Correct.
So I don't have to submit bills or receipts, proof of service. I mean, it's got to be for the right things, right? But it would be easier for me to collect on an indemnity plan.
Well, and so the big difference that indemnity plan is generally you're going to have a doctor submit, basically say that you cannot perform 2 activities of daily living. If you remember what that was at the very beginning, that's your bathing, transferring, going to the restroom, eating, all these, if you can't perform 2 of the 6, then they're going to send us into Nationwide or whoever it may be, and they're going to begin paying you those benefits that they said they would. And so it's really nice in that aspect because you don't have to spend a lot of time. I have a good friend and client who I think is probably on here. I wish I could give him the microphone right now because he would say he has a reimbursement plan for his mother. And this is one of those deals where it's a pain in the rear. every single month, he has to add up all of our receipts, send them in to the company, and then they issue a check. And, if you have little stuff that's here and there, it can add up. And you think about all the things that you need for living, especially as you age and the medications and all these different moving parts. This can be time consuming and it can be a pain in the rear. And I know that there are many Saturdays that he spending time doing just that. So make sure if you're looking at these plans, we prefer indemnity plans versus reimbursement plans, but there can be a cost difference, and we want to make sure that you understand the difference between the two. This would be a major question I would ask. Don't you think, Rich?
Oh, absolutely, because your time is worth something. And I like your client taking care of mom. I commend him for doing that. But he's got a job, he's got family responsibilities, and he's got to make sure, because one thing that's wrong is if he messes up one thing on that reimbursement plan, like he doesn't send in the receipt or anything, it's a pain in the neck. So the indemnity plan is so much easier than reimbursement.
Right.
I mean, listen, it's great that these moms got coverage, but that's more burden on a caregiver to put all the receipts, keep track of everything. It's another job that he has. So better that than nothing, but yeah, indemnity plan over redemption or reimbursement.
Absolutely. So, hey guys, we're going to get to some questions here. I think that this is extremely important time. This is, I was hoping to get to this a little bit quicker because I wanted to spend a little more time on the questions, because the Candid Coffee is really kind of supposed to be just open office hours, questions, what's going on in the world, the markets, all of those things. But we appreciate you guys being here. I know this is an important topic. If you have additional questions, obviously ask them now in the control panel. We'll try to get to them. If we can't right now, we'll get to them. We'll shoot us an email. We'll get to them off air here in just a bit. But
we'll use them on the radio show too. We'll use them on the Friday show.
That's right. Yeah. We'll cover it on Friday shows as well. So keep in mind though, if you want to have a quick call, don't hesitate to go reach out to us. At RIA Advisors or Danny at RIAadvisors.com. And also you can access our calendar if you want to just schedule a quick call right here, right now. So if not, shoot us an email. We'd love to help any way we can. So, one thing that I want to bring up, we had a client who just wrote in and always such good information. We appreciate you, Pat. And Pat says that he actually had his mother had long-term care. And what we've seen is as people age, a lot of times we come into these scenarios where maybe like we talked about, it's less, you can't afford it any longer, and so they actually wrote the company and said, hey, we need these payments to come down, and they actually reduced the payments, so they didn't run out of funds. So I think this is a great reminder, and I think this is fantastic, and I really appreciate you sharing this with us, because it's a great reminder with many of these things. You miss 100% of the shots you don't take. This is one of those deals where I think that this was fantastic that you reached out, you did that, and the company did the right thing. And so that's pretty cool. And I really appreciate you sharing that with me.
Well,
do want to give out go ahead.
Talk about thinking outside the box. That's an outside the box idea, right? I mean, who would have thought? And so, I mean, you really have to open up your mind with this long-term care stuff. It's not like a budget where you're accounting for every dollar. You have to be sort of creative with this whole long-term care process, and that was definitely a good tip.
Absolutely. No, that's the truth. So want to give away another mug before we move on to the next question. So Karen Brotherton, you send us your address. A mug will be in the mail next week. We appreciate all you guys coming and staying on, hanging in here with us as we explore and discuss some of these topics that maybe, I know, probably not what you really want to be doing on Saturday morning.
Now, also, if you have the mug, I'm just trying to do like somebody's doing this, but it's me. If you have the mug and you take a picture with your mug, we would like to use that maybe on our website overall. So send that to us too. We would like to see that.
Yep, absolutely. So thanks for mentioning that, Rich. So, hey, want to get to some of your questions? I'm seeing some roll in here. So will long-term care or life insurance companies soon require people to be vaccinated for COVID in order to provide coverage? Man, that's a great question. I have no
I watch that right
idea,
now.
but
I don't
I
either,
think it's
and
possible.
I'm watching that closely right now. And
Yeah.
I think it'll go by whoever the president is. President-elect Biden saying he's not making the vaccines mandatory. So I almost think that insurance companies would take their cue, because they're such lobbyists, they would take it from the executive branch. But I'm not sure. That is an incredibly good question. That deserves like a mega mug. I've been watching for that to see. I haven't seen anything, because I would think that maybe that would be something required, but I haven't even seen it mentioned. I mean, I've been on life insurance forums and everything, and I can't see anything about that yet. So I'm making an assumption that maybe I go by what the executive branch.
I think it's going to be difficult to mandate that, just like it'd be saying, hey, you have to have a flu shot. But who knows? I think anything's possible, especially the way that we've kind of combated this virus. So we'll keep you guys in tune with that. Now, so another great question here, Rich. So how do continuing care facilities fit in?
Well, they're they're one of those transition CCRCs, which they're very good if you can afford the upfront cost of purchasing, because it's a soup to nuts kind of situation where I have a very active section of a continuing care retirement community, right? And then I move through the entire community. This is really good for spouses, I've noticed, who want to do this, because you can have one spouse who's still healthy, lives in one section, the other spouse is maybe in assisted living, and they can still see each other. But you got to keep this in mind. There's going to be an upfront cost. First of all, there's going to be a waiting list. Then there's going to be an upfront cost, lump sum cost, to purchase your whatever it is, a home, patio home, whatever it is. Now, it could be partially tax deductible as a medical expense, something you want to talk to your tax advisor. But I have nothing wrong with these. Now, the latest updates with this is really interesting. They're connecting these CCRCs to universities, which means if you want to be a lifelong learner and keep your brain engaged, you will have the ability. Duke does this really beautifully. They have like the forest at Duke, and you can go to their courses and live in the college community. And I think a lot of older Americans love living in these college communities. It makes them feel alive. I mean, keeping your mental acuity, going to courses, using the facilities. If you can afford it and you find one that you like, then I don't see anything wrong with these communities. They will give you this, I live independent, so I need assisted living. What's the big one in Florida? I always forget the name of it. Oh my gosh, it's a Del Webb community. But there are a few of these, but the ones that are getting attached to universities are amazing. So look at the one at Duke, just so you get a feel for what that template looks like overall. But you can get a patio home or a small house right by the university. It's pretty neat. It's pretty neat. I like them.
Yeah, those
you can afford them.
Neat facilities, and we're seeing more and more of these facilities. Talking about the continuing care where you can age in place, and where you may have a husband who needs different types of care than the wife, but they can still be in the same area. I think it's fantastic. But we're seeing a lot of these facilities as well, even if they're not on a college campus, they're encouraging lifelong learning. And so where they may have a bus that sends you to the community college. Lone Star Community College here does that as well. So lots of good things that we're seeing come from this. I think this is going to be an area and a space that's going to continue to evolve as we have this big aging population right now. It's going to be huge. So
now again, the upfront cost, just one thing, the upfront cost could be very costly. Just had a client who did this and sold their home, and the upfront cost was like $450,000. It's not cheap. Not cheap, but it's definitely something you want to look at if you feel that this is something you want to do. Yeah.
Well, and if you're going to do something like that as well, you may be able to get some of that as via tax deduction. So talk to your CPA as well. Hey, you've got a couple more minutes left. We're going to get to a couple more questions. We're going to send a survey out. We want to know what's important to you. So please go fill the survey out. Let us know what you'd like us to cover in these. We're trying to do these at least once a month, maybe a little more frequently, depending on what's going on in the world. Obviously, things have evolved quickly. It has been one crazy year. I know everybody's anxious to get to 2021 and hopefully have 2020 in the rear view. So we have another question. If you're over 65, can you still get long-term care like Rich was talking about? And is it reasonable? What do you think, Rich?
May or may not be. I mean, I think it's going to be somewhat cost prohibitive, but if you're in excellent health and you only need modular coverage, like I only need X amount per day, right? And maybe I lower my inflation rider. I mean, you're going to have to look at that. But I will tell you, your monthly premiums are not going to be cheap. But if you're in the best of health, maybe you take limited prescription drugs, you don't have any congenital issues, you can say, hey, I only want to supplement. I don't need like $150 a day and 5% inflation rider. I need like $100 a day. And in other words, if you craft it properly, I wouldn't not look at it. I would still price it. But obviously, it's going to be more pricey than if you did it at 50.
Yeah, absolutely. And so it may be where you're not covering all of it, but you're covering a portion of it. So I think that's a very good thing to do. Let's see here. Get to some more questions here. What about the cost-benefit ratio of long-term care insurance? Well, I mean, I think these are always changing. When you say, Rich?
Now, what was that again? The what?
The cost-benefit ratio of long-term care coverage. I think it's going to be different for everybody, and it's going to be contingent on, what type of care you need, what your resources may be that you can pull from. And I think these are evolving as insurance is historically, this is one area that insurance has actually gotten more affordable.
Yeah. But yeah, it's relative to each person. So
Peter said, rather than wait for insurance companies to require a COVID vaccine, just get going on considering and buying coverage. I think that's always good. Good thought. I don't think they're going to require it. Wendy, what was the name of the company, Richard? So that was what, Nationwide?
Mm-hmm.
Talking about the policy you have?
Nationwide.
Yep. Perfect. So, guys, it is 9:02. We try to keep these right at an hour. We know we started a little bit late at 8:02, so we're going to call that a day. Thanks for hanging in there with us. We're going to give away one more mug. So this one's going to go out to JB Jones. Expect a mug in the mail. We really appreciate you guys listening in on these. We appreciate all of the questions you give us. It gives us lots of information. It gives us lots of insight that we can use in everyday life, as we're doing plans, and especially as markets and things evolve, like we mentioned so quickly. We hope that everybody has a happy holiday, Merry, Merry, Merry Christmas. You can spend it with time with friends and family safely, of course. And we hope everybody a great year of wealth and health.
Yeah, now keep in mind, January, we're going to do a boot camp. We're going to do what you need to do to get your year started, Candid Coffee. So it's not going to be so scripted. We want to make sure you are starting the year with the greatest tips out there. Not only that, for your family as well, maybe your kids.
That's right.
It's going to be like the boot camp, the pillars of finances for the year. We'll have that.
So I want you to look like Richard Simmons. You're gonna have your headband on.
I can do that
for your boot camp. Yeah. All right. Hey guys, you heard it here. Next month, Rich is gonna be in his best attire. So hey guys, thank you so much. If you have questions, if you'd like for us to address this, if you feel like maybe we have a plan that we need to address for you, if you are, guys are called. We'd love to help you with it. If you're not a client and you just have questions, don't hesitate to reach out. We'd love to help any and everybody, any way we can, even if it's just pointing you in the right direction. We love to help anyway. So Merry Christmas.
We love your questions. You don't have to be a client, right? We love your questions. Right. You help us out with our radio show. We want to help you out. It helps us out. We want to know what you're thinking. it really helps us as much as it helps you. So thank you.
Thanks, guys. Have a great weekend.
Thanks for joining us this morning for Candid Coffee, a production of RIA Advisors. If you'd like Rich or Danny to address your interests, email us at questions@realinvestmentadvice.com. Thanks for watching.